Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Bitcoin Bulletin. 1 year after Bitcoin's latest halving, what's different this time? Bitcoin has just reached its 1-year mark since its last halving event, and this cycle is shaping up to be unlike any before it. At first glance, the gains seem modest, with a 31% increase compared to previous cycles that saw explosive rallies reaching 436%. But scratch beneath the surface, and you'll find some compelling signs of a maturing market. The current cycle has taken a different route than its predecessors. Instead of accelerating after the halving, the price surge began earlier, in October and December 2024, followed by consolidation in January 2025, and a correction in late February. This front-loaded behavior diverges sharply from historical patterns where halvings typically acted as the catalyst for major rallies. Several factors are contributing to this shift. Bitcoin is no longer just a retail-driven speculative asset, it's increasingly seen as a maturing financial instrument. The growing involvement of institutional investors, coupled with macroeconomic pressures and structural changes in the market, has led to a more measured and complex response. The weakening strength of each successive cycle is another clear sign of this evolution. Explosive gains of the early years have become harder to replicate as Bitcoin's market cap has grown. In contrast, this cycle has seen a much more modest 31% increase over the same timeframe compared to 436% in previous cycles. This shift could mean Bitcoin is entering a new chapter, one with less wild volatility and more steady, long-term growth. The halving may no longer be the main driver. Other forces are taking over: rates, liquidity, and institutional money. The game is changing, and so is the way Bitcoin moves. Nonprofit organizations like Bitcoin Bulletin always aim to provide accurate information for our readers, but market conditions can change without notice. Always do your own research and consult with a professional before making any financial decisions. Join us on Telegram to stay informed about Bitcoin news and market analysis. The long-term holder MVRV ratio has always been a solid measure of unrealized profits. It shows how much long-term investors are sitting on before they start selling. But over time, this number is falling. In the 2016-2020 cycle, LTH MVRV peaked at 35.8, while in the current cycle, it's dropped sharply to 4.35. This isn't just a fluke. As the market matures, explosive gains are naturally harder to come by. The days of extreme, cycle-driven profit multiples may be fading, replaced by more moderate, but potentially more stable, growth. Still, it's not definitive proof that this cycle has already topped out. Previous cycles often included extended periods of sideways movement or modest pullbacks before new highs were reached. With institutions playing a larger role, accumulation phases could stretch longer. However, if the trend of declining MVRV peaks continues, it could reinforce the idea that Bitcoin is transitioning away from wild, cyclical surges and toward a more subdued but structured growth pattern. The sharpest gains may already be behind, especially for those entering late in the cycle. In conclusion, this story highlights an important shift in the way Bitcoin behaves after its halving events. By examining these trends and taking a closer look at market dynamics, we can gain valuable insights into what's next for the price of Bitcoin.